We're going to start our October meeting. I'm calling to order as we continue to make the transition to in-person meetings. Some of the participants are participating via teleconference. Today's public meetings are also being live streamed from the Port Authority website. Today's public session will start with the Committee on Finance, which will be chaired by Commissioner Cohen. That'll be followed by a committee on the Committee on Capital Planning, Execution, and Asset, which I will chair, and we'll conclude the public portion of today's meeting with a public board meeting. At this time, I turn to Commissioner Cohen and deal with the Committee on Finance. Commissioner?
Thank you very much, Mr. Chairman. Today's meeting of the Committee on Finance is being held in public session right here. Earlier today, the committee met in executive session to discuss matters involving ongoing negotiations or reviews of contracts or proposals. At this point, I ask the Secretary to advise those present of the composition of the Committee on Finance and any commissioner recusals on the matters before the committee at today's meeting.
Good afternoon. The Committee on Finance is composed of Commissioner Cohen, the committee chair, Commissioner McCabe, the committee vice chair, and Commissioners Horowitz, Menendez, and Richardson. All committee members are present. Also present are Chairman O'Toole, Commissioners Eve, Martinotti, and Rosado. We're expecting Commissioner LaBarbera to join shortly. There's no request for action and no recusals required.
Thank you very much. It is now my profound pleasure to do the one thing that I do best as chairman of this committee, which is call upon our Chief Financial Officer, Libby McCarthy. Libby.
Good afternoon, Commissioners. Today I'm going to present the 9-month financial results. Before we jump into the results, just our typical recommendation that those that are reading the financial information, which is condensed and unaudited, do so in conjunction with reading the audited financial statements and notes there too, which are available on the Port Authority's website, and also that any forward-looking information may prove over the long term to be inaccurate as a result of it being forward. So now let me just jump into our results here to date. Here you can see that as we continue to recover from the negative effects of COVID-19, we still are seeing impacts on our various business lines, and it does vary by business line. And I'm going to be discussing some of that as we go through the presentation and dive into the overall drivers here. But as you can see on this slide, the financial results for the first 9 months of 2022 are strong and well above plan, due to a combination of higher than planned gross operating revenues and lower than planned operating expenses. Net operating income for the 9-month period totaled nearly $1.9 billion, increasing by $400 million or 27% versus the same 9-month period in 2021. Excluding one-time non-recurring revenues of $32 million, net operating income for the 9-month period this year was $150 million or 9% higher plan. Overall, after considering depreciation and non-operating expenses, the agency had an increase in net position of $215 million for this period. This represents a substantial improvement over the decrease in net position of $118 million incurred during achieved during the first 9 months of 2021, but it does remain well below pre-COVID 2019 levels, where in 2019, the net position for the first 9 months increased by $566 million. All just to say that we are still continuing, while these results show strong improvement, we are still continuing to see the impacts of COVID-19 on our financial results. So let me just frame that a little bit better for you in terms of looking directly at the activity. Just to again orient you on this slide, the slide shows the activity levels in our bridges and tunnels on the left and path on the right. Activity volumes for 2022 are in green, 2021 in yellow, and as that pre-COVID reference point, 2019 is in the light blue. TB&T activity is represented on the left. While bridge and tunnel activity was impacted by winter weather related events in January that caused that decline that you see there, you can see here as well on the graph that since then, since February and through the end of September, TB&T activity has trended very close to 2019 levels and are at 99% of 2019 for the first 9 months of 22. Overall, the volumes are currently 2% lower than budget for the year. PATH, like other mass transit systems in the region, continues to see a depressed level of ridership due to a delay in employees' return to the office and potentially shifts by employers to remote or long-term hybrid work environments for their employees. PATH ridership finished the first 9 months at 50% of pre-COVID 2019 levels and was 35% lower than budget. On this slide, you can see aviation activity on the left and the activity at our marine ports support on the right. Aviation activity, particularly domestic travel, continued to experience a strong recovery during the first 9 months of this year, and total volumes for the period were 88% of 2019 levels. This is a substantial improvement over the activity levels at the airport for the first 9 months of 2021. Since the spring, the agency's airports have experienced higher than planned volumes as both pent-up demand and capacity growth from the airlines have supported the recovery of domestic and international air travel. Overall, aviation activity is slightly above plan for the year. Our port activity for the first 9 months of the year continues to break record levels and is currently 17% higher than budget. When you compare it to the first 9 months of 2021, port activity is up 11%, and it is 131% of 2019 levels. So how does all of that translate into our overall gross revenues? Here you can see the breakdown of the revenues by type, as well as comparison to 2021 actuals and the budget. Gross operating revenues for the year of $4.4 billion increased $550 million, or 14%, as compared to 2021. This growth is primarily driven by continued recovery of activity at our facilities, as well as the commencement of some new leases at the airports and the World Trade Center. And you can see that in that growth in that middle blue line, the more royal blue line, where you see that from 2021, there's nearly $300 million increase in rentals. And as well, you can see the recovery in activity in the tolls and fares, as well as the parking and other revenues. But because their agency is still recovering from the impacts of COVID-19 on its activities, it's important to also understand these results versus the 2022 budget, which factored in some levels of activity recoveries at the various facilities. Gross operating revenues for the first 9 months of 2022 were $139 million, or 3% higher than budget, while tolls and fares remained lower than planned for the year. As you could see from our prior discussion on the activity levels, the higher activity-based revenues at the marine ports and at the airports more than offset that underperformance. Moving on to expenses. Operating expenses for the first 9 months of this year totaled $2.5 billion, representing an increase of $143 million, or 6%. This increase supported the year-over-year increase in activity volumes across our facilities. Compared to the 2022 budget, the first 9 months operating expense was lower than planned by $44 million, or 2%. Through the third quarter, the agency's compensation expense was substantially lower than budget, and that's really primarily due to a non-cash actuarial adjustment to our pension expense due to investment gains on the pension plan's investment portfolio that was measured at March 31st of this year. In addition, expenses for contract services, which includes spending on snow and ice removal, which was lower than planned at the beginning of the year, is lower than budget year to date. This is partially offset by higher than planned utility and energy expense due to continued market-driven increases in rates this year. From a cash flow perspective, again, very strong results for this period. For the first 9 months of 2022, we had cash from operations of $2 billion, which is an increase of over $580 million versus the same period in 2021. And that's as a result of the activity recovery and the revenue recovery across our facilities this year. Cash and investments at September 30th totaled $4.2 billion, an increase of $400 million from year end. In addition to the cash and investments, we also had on hand at September 30th approximately $400 million of funds in our capital funds, and we had available commercial paper capability to support our capital program of $250 million. When excluding the General Reserve Fund, those capital funds and PFC's cash and investments at September 30th represented approximately 170 days cash on hand. And then looking forward at our debt as well, our bonds and other financing obligations at September 30th totaled $20.3 billion, which is approximately $575 million higher than the end of 2021, representing the net effect of new borrowings to support the Port Authority's capital plan and the retirement of consolidated bonds and commercial paper during the first 9 months of the year. That concludes my remarks, and I'd be happy to take any questions.
Questions, comments? Hearing none. Thank you, Libby. And this meeting is concluded.
Great, thank you very much. Hey, Kerry, we're about 10 minutes away, so I'm sorry to keep you waiting, but we have some business we have to get to, okay?